do start developing your retirement corpus right from the day you start earning, because huge retirement corpus will be required. And two major milestones I want to mention, because I don't have time, otherwise I have elaborated each and every one. Two. Firstly, you are aware that a MBA degree, just for example, MBA degree from a reputed institute in or university, a management university or management institution in India, normally costs not less than 20 lakhs for two-year regular MBA degree today. But my dear friends, when your kids, your children will go for higher education after 20 years, 25 years, you might not have thought of it. The MBA degree, which is costing around 20 lakhs today, will cost not less than 2 crore rupees per child after 25 years. 2 crore rupees per child only for higher education of one children. And perchance, if you have got two children, not less than 4 crore will be required only for the giving best higher education and professional education to children domestically. If you want to send them to some reputed international institutions or universities, this 4 crore might go up to 5 crore or even 6 crore. So 4 to 6 crore only for higher education and professional education of children. Now, one more factor I want to tell you about the retirement. I was talking about you. Suppose a person at the age of 30 today, he says, and in middle class I'm talking about, he or she says that they are managing their monthly expenses with 30,000 today. After 30 years, when they become 60 and just had retired, they might have not even thought of it. They are managing their monthly expenses with 30,000 today after 30 years. For the same standard of living, no extravaganza, my dear friends. He or she will need not less than 2 lakh rupees per month because of inflation. So 2 lakh rupees per month is the first month of retirement, and now salary is not coming from where 2 lakh rupees will come. And 2 lakh literally means 25 lakhs in the first year of retirement. From where it will come if you want to lead a comfortable life. And definitely every individual will like to lead a comfortable life. That is foregone conclusion. So from where 25 lakhs will come, friends? There is a way out, which I just mentioned. Start developing your retirement corpus. Start developing your retirement corpus. And because that huge retirement corpus will be required. And what should be the level of retirement corpus? A thumb rule I can share with you. Your retirement corpus should be 20 times of your annual expenses in the first year of retirement. I again repeat, your retirement corpus should be 20 times of your annual expenses in the first year of retirement. So we have just calculated broadly that the first year retirement expenses will be 25 lakhs multiplied by 20. What it becomes, sir? 5 crore. Now you see, 5 crore for higher education of children, 5 crore for retirement life, other things apart. So a normal middle class, salary class person will need not less than 12 to 13 crore for his or her milestones only. And in these 13 crore, I have not added the normal monthly expenses from 30 year to 60 year. That is apart. That is extra. From where that 12 to 13 crore will come, my dear friend. Mind it. Just give a thought to it. Only way out is start saving right from the first month you start earning. Be regular in saving. Keep increasing your saving with the increase in income. These three steps you have to keep in mind about saving. Then is that invest your savings into good investment products. Initially, in the product where relatively has got little bit higher risk, but then your focus should be on getting maximum real return on your investment for the first 15, 20 years minimum. After that, your thinking will automatically shift from those products which have got high risk to products which have got reasonable risk. And when you cross 60 like me, your risk taking capacity will become literally zero. So you will focus on the products only where there is no risk. Return might be lower, return might be reasonable. Because after 60, my focus is now not to get return, not to look at the return, but to the safety of the investment. And you are all aware there are three metrics of investment: return, liquidity, and security. Sometimes these are contrary to each other. If you go for only for the security, forget about the higher return. If you go for the higher return, you have to compromise with the security. Then liquidity is also expected, which simply means you will need the money. You should have money when you need the money. That is called liquidity, because you should invest wisely. Your investment in such a manner that when any milestone in your life, just we have discussed, comes, you have money to take care of that milestone. So these we have just discussed is develop your financial plan. And financial plan is not a rocket science, my dear friends. Every educated person can develop his financial plan, and you ought to develop it as early as possible. When you start earning in the first year of your career, when you start earning, please do develop your financial plan. Of course, you will keep revising and modifying your financial plan in future according to the new needs and other developments in your life. But initially, you should have some prima facie some financial plan, because through financial plan, you are defining your financial targets. Which money you will get at what time for what purpose. That's the purpose of making your financial plan. For marriage, you will need money. How much you will need, you can plan. No, again, you can yourself can decide how much money you will need. Then for purchase of house, again, you can decide how much money you will need and at what time you wish to have a construct or purchase a house. Then purchase of vehicle, then going on vacation, then higher education of children, then marriage of children, and then retirement life. So please do develop your financial plan. And once financial plan is in place, you have defined your financial goals. And psychologists say those who define their goals, including financial goals in life, they work hard because of the simple reason. Now you have defined your goals. You have defined that after 5 years you will need this much of money for that purpose. After 10 years you will need money, this much of money after for that purpose. So now you have defined your financial goals. That is the importance of financial plan. So I again request all of you, when you start earning, in the first year of earning itself, you should draw your first financial plan, because financial plan will give a directional approach towards saving and investment. Now the goals are clear. And once goals are clear, you will definitely have to work hard for achieving those goals. That's the purpose of financial planning. And one more thing I want to stress here, and that is eighth wonder of the world, my dear friends. That is called power of compounding. And my dear friends, power of compounding is eighth wonder of the world. And what is power of compounding in investment? You might have read it in it. There are a lot of material and books available on power of compounding on investment. But I am a student, so I will talk in the student terms only. Power of compounding simply means you make a promise with yourself, not with others. You make a promise with yourself, and the promise is whenever I get return on my investment, and definitely you will start getting return, definitely. Because once you start investing, saving and investing, you will start getting return over a period of time. May not be today, may not be tomorrow, but after 1 year or 2 years, you will start getting return on your investment. So whenever you get return on your investment, return might be 5,000, return might be 50,000, return might be 5 lakhs. That return you will never consume or use. Then what you will do? You will simply keep reinvesting that. And not once, regularly for the next 10, 15 years minimum. I again repeat, when you get return on your investment, you have promised yourself, not with me, not with anybody else, only with yourself, that whenever I will get return on my investment, return might be any amount, I will not use that return for my consumption, for my use. I will keep reinvesting it. And not once, not twice, but regularly for the 10, 15 years. And my dear friends, if you do, and very honestly speaking, there is no other option but to, if you want to make huge money from investment, that's the only way out. You have to religiously follow power of compounding in your investment philosophy. So whenever you get return on investment, keep reinvesting it for another term for the next 10, 15 years regularly. After 10, 15 years, you can't even imagine today how much money you will have in your heads. So please religiously follow power of compounding. So just to recapitulate what we have just discussed in 10 and the next last 30, 40 minutes, saving is very important. Start saving right from the first one when you start earning. Be religiously regular in saving and keep increasing your saving with the increase in your income every year. Then don't put or keep your saving at home. Religiously invest your saving, put your money into one or other product that is called investment. And in investment, try to get maximum real return on your investments. And for that, you have to manage your risk. So risk management is also very, very important. Then financial plan for achieving the goals of financial goals in your life. Financial plan is very, very important and very, very crucial tool for achieving the financial goals in your life. So please do make your financial plan. And lastly, please do religiously follow power of compounding, because only through power of compounding you will make huge money out of an investment, but not today, not tomorrow. It will take time. Power of compounding simply says three things about investment. Number one, have sound investment. Number two, have longer horizon of investment. Don't be a short term like trader, like punter. And people are now, ma'am, you might be aware, a lot of your students are maybe in a F&O segment now. That is, I think, most dangerous thing we are doing. SEBI has time and again warning all youngsters particularly. F&O segment is not for retail investors like you and me. It is not for us, minded. And SEBI has given data to their request. 96% of the retail investors have lost money in F&O. 96%. 3% have been flat. No profit, no loss in F&O. And only 1% might have earned some profit. So what it conveys, that F&O segment is not for the middle class, salary class person, retail investors. And for that matter, again, trading and jobbers are there, purchase at 10:30, sell at 11:30. And the same goes with trader and jobber. That is not your job. For middle class, salary class person, particularly Krishna ma'am, you have to be a long-term investor. That's the only way out. If you want to make money out of your investment, the only way out is go for the sound investment. Sound investment simply means investment in the best product available. Secondly, have longer horizon of investment, and longer simply means not less than 5 years. Then again, maybe 10, 15, 20 years, but minimum 5 year horizon should be there. And thirdly, have patience in your investment. Give your time, your investment to grow. It will definitely grow, provided you have done your sound investment. All these three things are interlinked. So through these things, you can be a successful investor. Lastly, we will discuss where to invest, because that is very important. What are the products available in the market? I don't have time. I will be very brief on those products. But next time, if you are interested, we will elaborate. We will have a dedicated session on the investment products available in the market for the middle class, salary class person particularly. The first category of investment products available for middle class, salary class person, that is through governmental small saving scheme. Government of India has started some small saving scheme for the middle class, salary class person. I will just name them. I don't have time, but I will just name them. Those who are interested can note them down. Number one, and I feel personally is a very good scheme of Government of India. That is Public Provident Fund Account, PPF. Public PPF is a very good scheme of the Government of India. And the beauty of this scheme is it is tax exempt. Rarely, even in government scheme, tax is payable on your return. But in PPF, whatever you earn, no tax is payable. And the faculty member sitting, I can see her, or all young faculty members who are here, I will request all of them. If you have not opened PPF account, please do it as quickly as possible. And for students, I want to request you, when you start earning, initially you might not be having a great package. Please do open a PPF account. Very good scheme of the Government of India. You can get the details from the website of post office and banks. Second is, again, I will just name only National Saving Certificate, NSC, National Saving Certificate. Third one is Kisan Vikas Patra, Kisan Vikas Patra. Fourth one is, fourth one is RBI bonds. Reserve Bank also keep issuing bonds to the public, and the return yield is around 8% even today, but of course taxable. Then government securities, you can invest in government securities. In government securities, return is around 8% even today, but of course taxable. Then banks and post offices have got some schemes of investment. You can look at the websites of those banks and post office. There are some schemes, saving schemes of banks and post office as well. Then public sector undertakings, big entities of public sector like ONGC, Indian Oil Corporation, BHEL, they also keep raising debentures and bonds to the public. And if you want to invest, that option is also available. All these are under the umbrella of governmental small saving scheme. The plus point is there is no risk. There is no risk at all. Whatever government promises you, government will give you. But minus point is real return is hardly very small, very, very low real return. And sometimes there is no real return. Second category is real estate and property, where you can invest. Real estate and property beyond government schemes, real estate and property where you can invest. And you all know how to invest in real estate and property, but there is a risk in the real estate property. Property's price might go up, property might go down. So there is a risk. And again, for real estate investment, you will need huge investment. Thirdly is gold, where you can invest. Gold has historically been one of the most important investment product for the middle class families in India. Not today, but for centuries together. Every Indian family, particularly female members of the family, they are passionate about gold. Whenever you discuss in family about the gold, what your female family members will say, "Arey Baba, no discussions at all. What for we are discussing gold? Discussion is not required. Go and purchase gold." Historically, we have been purchasing gold through jewelry. But my dear friends, I want to request all family or female participants here, please have second look at what I am saying now. Physical gold is a losing proposition, particularly in jewelry and when you go for the purchase, it is a losing proposition. Why, Krishna ma'am? Because today, suppose you have purchased a necklace of 10 lakhs rupees. You are very happy, enjoying it. After 10 years, you say, no, the design change. I want new design. You go to the jeweler. What jeweler will tell you? Yes, ma'am. You had purchased it from us. We will take it back. You can purchase the new design. But ma'am, there is a cut of 30 to 40% on making charges. Mind it. That there will be shocked for you. You were shocked. 30 to 40% cut of making charges. That is why now I think you should change your mind now of purchasing physical gold. Go for the digital gold. Digital gold facilities are available now. Most of the institutions, extended funds are there. Most of the bigger institutions are giving you ETF. Digital gold simply means no physical gold will be given to you. No physical gold. You will be getting a certificate from that this much of gold is of yours is with them. So, and after 10 years, suppose you want to redeem that gold scheme, you will get price of the gold at that time. So suppose today the gold price is 8,000 per gram, and after 10 years the gold price is 11,000 per gram, because you all know gold price is increasing for last 30, 40 years, and this trend is going to be sustained because of international conflicts and all these things. So after 10 years, if you want to redeem that gold ETF, you will get your money back at the rate of 11,000 per gram. So mind it, I will request all of you, go for the digital gold now. Don't go for the physical gold. Now, lastly, where you can invest in security market. But my dear friend, security market is purely knowledge-based market. Mind it. And unfortunately, I don't know whether you will agree with me or not. 99% of the people, Mr. Priyanshu Bhaskar, still don't have any knowledge of the security market. 99%. 90. Because why Krishna ma'am is investing in security market? Because my sister is investing. Because my friend is investing. Because my colleague is investing, so I am investing. You don't know anything what the company is, how the share price goes up, how the share price goes out. What is the dynamics of security market? You don't know. But people are investing. I am also investing. It's a wrong proposition at all. Never invest your money on the shoulders of others, because they will not come in the play when you get some losses. Only you will be loser. So if you want to invest in security market, my request is, please have knowledge of the security market. Otherwise, don't invest in security market, at least directly. But there is an indirect way of investing in security market, that is called mutual fund. And next time, ma'am, if you permit me, next time we will have a dedicated session on mutual funds, of around two hours, where we will in detail discuss about the mutual fund. But very briefly speaking, what is mutual fund? Mutual fund is nothing but indirect way of investing. You are not directly investing, you are giving your money to some experts, which are technically called fund managers. Naturally, Krishna ma'am will ask me, sir, why I should give my money to others? Naturally, very natural question. Why I should give my money to others? Because of three reasons. Number one and foremost reason is, I don't have knowledge of the market, but they people to whom I am giving my money are the experts of the market. But please mind it, Krishna ma'am, they are the experts, they are not God. They are the only experts. And in security market, there can't be any God. So what I want to tell you, but relatively speaking, as compared to me, they are better placed to take good investment decision. So firstly, I don't have knowledge of the market, but they people have knowledge of the market. Secondly, I don't have time. Customer ma'am has got full-time job, then family to look after at home. You don't have time, and investment is a very serious business minded. I am giving my money to the person who have 24 hours to manage your money, because they are getting some fee out of it. They are not doing any social service. They will definitely get some money out for their services. And one more thing I want to tell you, mutual fund is not a Ponzi scheme. It is not a committee. It is not a cheat fund. Mutual fund is strongly regulated by SEBI. Mutual fund is strongly regulated by SEBI. Every aspect of the mutual fund scheme, each scheme is strongly regulated by SEBI. So, secondly, that you don't have time, but they people have time 24 hours to manage your money, because they will getting fee. Thirdly, you don't have any experience of investing in security market, but they people are having 20-25 year experience in the security market. So they are better placed to take a decision. And fourthly, all mutual fund decisions by mutual fund managers are taken not by on their own. they are strongly supported by the researchers, and they have got a very strong research team. So research team first evaluate and go deeper into the each and every script or equity before recommending any investment. And once research recommends some share to be purchased or sold, then fund manager takes a call on this. So it is a scientific way of investing. It is not a casual way of investing. It is scientific way of investing. Investment. And one more benefit of mutual fund is your investment is diversified. Diversified, how, Krishna ma'am? Suppose you invest in a particular scheme, but with you, lakhs of other people are also investing in the same scheme. So by pooling money of lakhs of people in one scheme, crores of rupees are there. That crores of rupees give leverage to the fund manager to purchase lot of shares of lot of companies. Because suppose, Krishna ma'am, you have got 10 lakhs rupees. How much share you can purchase of a particular company? Whatever it might be. But suppose you have got 1000 crore, then you can purchase shares of 100 companies. What benefit it will have? That out of 100 companies, 10 might not perform well. They might not give any profit, but 90 can give you profit. So return is average out. Risk is also average out in the mutual fund because lakhs of people are investing in one scheme, and the fund manager has leverage of having huge money which he can diversify his portfolio. Secondly, investment in mutual fund is very easy. Everything is available online now. Everything. No need to go to the bank or any entity. Everything you can done on online. And redemption is also very easy. Suppose you are investing for 10 years and you have accumulated 50 lakhs, you want 5 lakhs. Go to the redemption website of the mutual fund company where you have invested, put the amount, complete the formality. Within 48 hours, 5 lakh will be in your bank account. And since everything in mutual fund is through banking channel only, no cash is accepted, no cash is given. The chances of fraud is very minimum. Because you will invest the money only through banking channel and you will get the redemption only through banking channel. So, and you can invest very small amount. That is through SIP. And SIP is a magic for middle class, salary class person. SIP is systematic investment plan. And SIP is nothing, it is just like a recurring account. Krishna ma'am must have opened a recurring account with the banks. Every middle class people have done it. It is just like a recurring account. You are investing every month some amount. The minimum amount of SIP is 500 rupees. Maximum there is no limit. You can invest 50 lakhs rupees, but minimum amount is 5 lakhs rupees. I just give you an example because I don't have time. Otherwise, next time we will discuss in detail. Suppose a person at the age of 20 start an SIP of 500 rupees only in a good equity fund, only 500 rupees. And he or she continued with the SIP for 40 years. Every month he or she is investing 500 rupees. And 500 rupees will automatically be deducted from your bank account. No need to go anywhere else. Only thing is, you should have money in your bank balance. You should have bank balance of that amount of SIP. So every month, SIP will be deducted from your bank account and it will be invested. And by evening, you will get the statement how much money they get and how much units you have been allotted. So you started a SIP of 500 rupees and you continued with the SIP for 40 years, but only 500 rupees. After 40 years, I'm presuming a return of only 12%, whereas the security market has given a return of 15%. So after 40 years, the corpus will be 48 lakhs by SIP of, and that is a mathematics. I'm not giving any magic. It's a sheer mathematics. 48 lakhs after 40 lakhs. But there is another smarter way of doing SIP. That is every year you should increase the SIP amount by 10% because your salary will increase, you will get increment. So you can increase the SIP amount. Suppose you started with 500 rupees, next year you increase it to 550 for second year. And third year again you increase 10% of 550. Every year you are increasing 10% of SIP. It is called top-up SIP or step-up SIP. It is just wait for a minute. Once my session is over, and you can ask the question. So after 40 years, the flat SIP of 500 rupees has given you 48 lakhs. But Krishna ma'am, if you increase the SIP every year by 10%, you will have a corpus of 1 crore 98 lakhs. Literally 2 crore rupees. If you increase the SIP, and that again is a mathematics, it is not a magic. So, and I know a lot of friends, young people like you, who have started not one SIP, but 5, 6 SIPs are running together consecutively. And every SIP has got a target. One SIP for purchase of house, another SIP for purchase of car, third SIP for going on vacation, fourth SIP for higher education of children happening after 25 years. You already started accumulating money for that. Fifth SIP for marriage of children, and last SIP maybe for your retirement life. So you can start multiple SIPs, have a longer horizon. And SIP is a very, very good wealth creator for the middle class, salary class person. But again, long-term investment. Minimum 10, 15, 20 years, if you continue the SIP, rest assured you will have a huge amount. I don't have time, otherwise I would have continued with the mutual fund. Last two things I want to tell before closing my session. Prosperity is our right. My dear young friends, please understand, prosperity is our right. And my definition of prosperity, Krishna ma'am, is not to be Mukesh Ambani. That we can't be very honestly speaking. My definition of prosperity is very simple. I should have money for my needs. I should have money for my comfort. I should have money for giving comfortable life to my family. I should have money for giving best higher education to my children. I should have money for all my family obligations and liabilities. And I should have money for my retirement life. That is my prosperity. And I think it is your right. Every individual has got right to be prosper. But my dear friends, prosperity is not luck. Mind it. Unfortunately, we Indians believe much on luck. Joe, whatever is on luck, we will get it. Forget about all these nonsense. I'm very clear. Your prosperity is not your luck, friends. Your prosperity is only your effort. If you make the effort, you will be prosper. So, Krishna ma'am, choice is yours. Whether you want to be prosper, you have to make choice. And what is choice? You have to start saving. You have to start investing. So prosperity is not your luck, it is your effort only. And my dear friend, and for that matter, even Krishna ma'am, if you are not prosper as per my definition after 25 years, 20 years, to whom you blame? Only yourself. Only you will be responsible if you are not prosper. Why? Because you lacked somewhere. You didn't save the sufficient amount. You didn't invested in the best available product. You didn't look at your investment product regularly. So prosperity is not your luck. It is your effort. Please make effort and you will be prosper. Nobody can stop you. Nobody can deny you the right of prosperity. But again, I tell you, it will not happen automatically. You will have to work hard for your prosperity. And lastly, there may be one or two participants. Of course, may not be. I rather I will feel more happy if there is no participant. But there may be one or two participants, my dear friends, who have a different mindset. Of course, wrong one, but they have. What is that? I have born in a poor family. My family is poor. I want to tell all of them, those who have this typical mindset, forget where you are born, my dear friends, because birth is now in a foregone conclusion. We are here in the world to enjoy the life. So wherever we have got birth, it has got no significance now. So birth in a poor family is not a curse at all, mind it. Birth in a poor family is not a curse at all, but at the same time, Krishna ma'am, living as poor and die as poor is a curse, which we all can avoid by managing our money right from the day we start earning uh, in a most prudent manner. And if you do it, I can say you with confidence that you all will be prosper, and that is your right. Thank you very much. And if I have taken a little bit more time, sorry for that. Thank you very much. Now anybody can ask any question. I welcome you to ask the question, please.
Thank you so much, sir. Now we are open to questions.
I will welcome question from young participants. I don't know whether they have liked the session or not. That I can't make out because because we are connected through this meeting. Had I been in physically present with all of you, I could make through your eyes or your body gesture whether you have got something out of that. But anyway, if you have got any questions, you are welcome to ask the questions relating to investments and all these things which we have just discussed. Young minds, I just request all of you, young mind must have questions. Being a student, the only
Aksh,
basic
Ak-
character of a student. Yes, ma'am. Yes, ma'am. Yes.
yes,
Yeah, ma'am.
Good afternoon, sir.
Good afternoon, my dear.
Sir, looking at the current scenario at the economic conditions, which companies would you suggest for a beginner to invest for?
My dear, again, you are putting me in a very, very perplexed situation. Suppose I say you this company, then other company will get nerd. Or I may be branded that I am promoting a particular company. That is my job, not honestly. But at the same time, you should invest in sound companies. And sound simply means financially sound companies. And what is the definition of financial sound companies? Have their balance sheet. Have a look at their balance sheet. Have a look at their professional profit and loss account. Have a look at their cash flow. Have look at their management team. Have a look at their consistent performance for at least last 3 years. So these are the fundamental things you have to look at while deciding of your investment in a particular company. But of course, if I say this one is good, then ma'am, your teacher, even your faculty member say, sir, you are promoting a particular company. That I will not do.
Thank you so much, sir.
Yes,
sir, I
any
would
other
like
question?
to ask one question.
Yeah, ma'am.
Yes, sir. So as of nowadays, we are seeing the downturn in the market. So what is your opinion that whether we should shift our portfolio in the real asset or physical asset, or should we be in the financial assets only?
Would you do what I say?
Yes, sir.
Would you do what I say?
No, sir. I'm just asking. I'm just asking your opinion, of
No, no,
course.
no. That's why I'm telling you.
Yeah.
As far as my opinion is concerned, ma'am, this is the
Yes.
right time to invest in security market. Don't be afraid of the where the market is, because you will appreciate, ma'am, volatility is the basic character of the market. Market always go up and down. Today market might be down. Tomorrow market may go up. But one thing you will remember, or you should remember, BSE Sensex started in 1970 at 100 point only.
Yes, sir.
And where it is today, ma'am? 75,000. A person who invested 100 rupees in 1970 has become 75,000 rupees. So what I want to tell you, my session also I have covered it elaborately. Be a long-term investor. Don't afraid about the market movements. Market will go up and down always, but over a period of time, you will get good return. And ma'am, you will, if you remember, security market has given 15% average annual return during last 15 years. Sorry, during last 30 years. Average 15%. Of course, some year it might be 30%, some year it might be even minus. But average. So what I want to tell you, if you want to get average return on investment, you will have to give time to your investment to grow and
Thank you.
have a minimum horizon of 5 to 10 years. So enjoy investing. And if but one more thing I want to tell you, very in a very lighter vein. If you are invested, don't see every day the price of the market or a share. You might have got BP. That is not your, because you are a long-term investor. You are investing for a long-term, 5 year, 10 years. Forget about daily movement of the market. Over a period of time, I personally feel we have got a very sound economy and we have got a very good future prospect as far as Indian economy is concerned. And you will, those who invest today will get very good return tomorrow.
So good
Thank you, sir.
afternoon, sir. If
Yeah.
I have some money to invest, but I don't know how much to invest in the stock market, I'm new to stock market. If you invest to, if you prefer to invest me or own, or you will refer a professional manage to investor, which will be good for me.
There are two channels of investment through which you can. First is direct investment. Second is through some advisors, maybe mutual fund distributors like that thing. It is your choice. Firstly, your first question is, I have small money. Should I start investing? This is the right moment for you to start investment. If you have got even 500 rupees, please start investment. Don't wait for tomorrow, because normally people what happen, we Indians have a typical mentality. We talk too much, we do very little. We will talk much about the investment, discuss with people, and then we will not invest. Please execute your plan. Start investing. Maybe I again tell you 500 rupees, because you might not have a good money because you are a student. But even 500 rupees out of your pocket money will give you a flare after 3-4 years when you will actually start earning. By that time, you will be a smart investor. So I will request all of, and I tell you one incident. I was very happily surprised. In the month of February, I went to a good management institute in Greater Noida, UP, Rajasthan, in Uttar Pradesh. There was a batch of 298 students, all MBA students. And I was happily surprised that out of 298, 268 have already started investment. Maybe 500 rupees, maybe 1000 rupees, maybe out their pocket money. But they have started. But please, again, I will, my advice, don't go for F&O. Don't go for daily trading and jobbing. That I think you should not be our business of investment. You should start investing for a longer horizon.
Thank you.
Yes, any other question?
Good afternoon, sir. It
Yeah.
was a great session. I would like to ask one question. How does inflation affect wealth creation, and what, according to you, are the strategies to deal with that?
Actually, there are two factors which affect your investment. The first and most important, or most glaring rather, you say, is inflation. And you might not be aware, a majority of the return is eaten by the inflation only. Majority, sometimes even 50, 60, 70% of the return. And please appreciate, inflation is a part of our life, and inflation will be a part of our life. Inflation will be there. It is not going soon. For the next 25, 30 years, inflation will be there in our country. Till we attend the state of developed country, just like USA, where inflation used to be, not after Corona. Before inflation, in America, inflation was hardly 1 or 2%. But in our country, it used to be 13%, more than 10% in many of the years. So what I want to tell you, inflation is going to be part of our life. And inflation will continue to eat majority of your return. That is why I emphasize, try to maximize your return. And how much return you should get? A thumb rule I want to tell you. What is a reasonable return? A thumb rule, just a thumb rule. If your return is inflation plus GDP, suppose inflation rate is 5% and GDP is 6%, and if your return at 11%, it's okay. It's a reasonable return. So, because we can't fight inflation, but what we can do on the other side is we keep increasing your return. So even after beating return, Even after giving tax, we have some return, and that is the real return. So my answer to you in short will be, try to maximize your real return. That's the only way of fighting inflation.
Okay, thank you so much, sir.
Yes. MB Hall 3.
Good afternoon, sir.
Yes, my dear.
Sir, I have one question, sir. Investment roles of mutual funds, can you explain, sir?
Actually, it will take minimum 2 hours. Honestly speaking, I will try. Well, I have tried to just touch some aspect of the mutual fund. Next time, if you are interested, we can have a dedicated session on mutual fund. Well, right from the start, we will discuss mutual fund. But investment of mutual fund, again, I repeat, of course, it is repetition only. In mutual fund, you are not investing. You are simply giving your money to some experts. That is why I always term mutual fund not as an investment. Mutual fund is not an investment, my dear friends. It is a channel for investment. You are giving your money to the mutual fund schemes, to the fund manager. And one thing you might not be aware, generally people think mutual fund is also security market. No, it is not. In mutual fund, schemes are there where your money will be invested in government securities or government schemes. In mutual fund, there are schemes where your money will be invested in real estate. In mutual fund, there are schemes where your money will be invested in gold, silver, and other commodity market. In mutual fund, there are schemes where your money will be invested into international corporates. You sitting at Bangalore can invest in Google, Facebook, Amazon, Microsoft, lot of big names through international funds. So mutual fund basically a channel for investment, and it gives ample opportunity to invest in different categories of investment products. And of course, it is totally tax heavy. Everything you can do with regard to mutual fund and through online only. No need to not to go for investing and also getting your money back. Yes, any questions or
Thank you,
we,
sir. Yeah, we'll take one more questions. If you wish to ask, you can ask. Okay, I think no more questions. Now over to Safika, ma'am.
firstly I would like Savika ma'am to give her opinion about the session. Sitting the youngster sitting before me, I can just raise your hand if you have liked the session. Just raise your hand. Thank you. Thank you very much. Mr. Sunny Kumar, do you have any question? Or Samin Jahan?
Safika, ma'am. Ma'am, are you there? Are you able to listen to us?
Yes, sir. Am I audible?
Yeah, ma'am.
Yes.
Yeah, continue.
Sir, it is really nice session and I have learned a lot. Thank you so much, sir. So as we come to the end of this insightful session, I, Shafika, would like to extend our heartfelt gratitude to our esteemed speaker, Shri Surikant Sharma ji, for sharing his valuable knowledge with us today. Your expertise, and deep understanding of financial market, investment strategy, and risk management have truly enlightened us and provide us with an actionable insights. We appreciate you for taking the time to engage with us, answer our questions, help us to navigate the complexities of finance with clarity. It has been an absolute privilege to learn from you, sir. We thank you all students, faculty members for their active participation. We hope this session has been beneficial We'll look forward to bringing you more such enriching discussion in the future. On that note, we officially conclude today's webinar. I can say that stay safe, stay informed, and keep investing your time in financial knowledge. Thank you all. Thank you, sir.
Thank you, ma'am. On my behalf and on behalf of AMFI, I am thankful to all of you. And I think this is just the beginning, it is not the end of our interaction. In future also, we will keep interacting. And whenever I visit Bangalore, I will be more than happy to come to your university.
It's really, really grateful, sir. Your knowledge is too much immense, sir. So we learned a lot, sir. And it is very good for our students as well, sir.
Thank you, ma'am. And of course, special thanks to Mr. Sabjar Ahmed for coordinating this event.
Thank you, Shabzar, sir.
Thank you to all of you again. God bless you. Khuda Hafiz.
Thank you, sir.